$739 billion are projected to be entering into Bitcoin and the crypto ecosystem soon, and virtually no one is onto this yet. This isn't from new taxes or printing more dollars. It's from revaluing gold already locked away in America's vaults. And currently, this decision is being decided upon now and could hit the market sooner than most people realize. This kind of firepower flowing straight into the hardest asset on earth, Bitcoin, and the ripple effect this could have could hit every corner of the market, flipping the supply and demand balance in an instant. And in terms of timing, well, Bitcoin's charts are coiled tighter than we've seen all year, meaning all we need is a catalyst. We need something to trigger the infamous or famous bull run, and it is here. It is basically upon us. We also see that Ethereum's supply is disappearing. It's moving off exchanges, and corporate treasuries are racing to buy and accumulate as much Bitcoin as they possibly can. And if we combine all these elements I just mentioned, we've got the early stage setup so rare, it could shape the next decade of crypto. So in the next few minutes, guys, I'm going to show you the signals pointing to this and the moves already happening, and the one factor that could be this catalyst I'm talking about to set off the whole domino effect. So happy Friday, guys, and let's jump into it. Okay, so starting with the signals flashing on Bitcoin's chart, we just saw Bitcoin retest what traders call the golden line. This is a key level where every major rally in the past has been decided. Okay, if it's gonna live, if it's gonna die, what's gonna happen. And this time it held on strong and it propelled upward with force. And this key event has shifted the entire sentiment in the Bitcoin crypto market. We've seen fear fade and a bullish sentiment and confidence come roaring back. Momentum's been starting to build again. And in past cycles, this same sequence has been the opening act, okay, before some of Bitcoin's most violent pump up. And at the same time, price action is pressing against the upper boundary of a rising wedge pattern. Now, wedges can break either way, but when you see the kind of buying pressure we're seeing right now, which we're going to get into in greater detail here just in a moment, it's like filling a dam of water, okay? And every day, and a little bit more pressure until one day, it crumbles. The walls burst. And here's another signal we're seeing right now, the golden cross, which is when Bitcoin's 50-day moving average crosses above the 200-day moving average. History shows us we've seen 139% pump or increase after this same golden cross setup in 2016. Then we saw a 2,200% pump in 2017 after this same setup, and 1,190% in 2020. So this is the setup we're talking about right now. We're seeing this setup right now. So what's logical to assume? Chances are we're going to see a similar pump here very soon. And if this wasn't enough, the cycle's timing is flashing green. When you line up the 2017, 2021 cycles from their bottoms, both point to a potential top in late October. So this means the window we're in right now in time and space, this exact stretch of weeks, has been the launch pad, so to speak, in past bull runs. We don't get all of these events and elements lining up very often. And when we do, it's usually a time when the market starts moving fast. And if we zoom out, the macro picture is feeding the fire. Right now, we see the global M2 liquidity, the global money supply, basically, that's liquid and in circulation, is climbing again. Over the years, Bitcoin has moved in near lockstep. Okay, there's a little bit of a lag, but basically when the global money supply, M2, pumps or moves up, Bitcoin is not far behind it. And right now, both are trending higher at the same time. And whales know this. So they are buying as much as they possibly can as well, as should we. Though this is not financial advice, but I feel this is very obvious. And we also see ETF inflows and on-chain data from large accumulating addresses confirming this. This is aggressive positioning from smart money that we're seeing, and it's happening while other major signals take shape as well. So if you ask me, it seems like an explosion, literally like a volcano is just taking shape and form, and soon it's just gonna like explode. Now, let's take a look at Bitcoin dominance. Right now, the multi-year uptrend is intact, leaving room for another push into the high 60s or even low 70s range. While on the other hand, a break below 60.5% on the weekly would trigger the kind of altcoin rotation we have not witnessed since 2023. So if you weren't around then, this is when capital flooded out of Bitcoin and into high beta altcoins. I actually did a whole analogy for you a few videos ago, but I'll do it again. Here's my coffee mug. Say hello, right? So imagine I'm pouring coffee, right? This is like Bitcoin dominance. As soon as it overflows, it pours over into typically like Ethereum. And then from there, top beta plays, beta altcoins. Okay, so that's the setup we're seeing right now. Anyway, back in 2023, when we had this setup, it set the market on fire and it went into parabolic mode within weeks. So that's what I'm trying to reiterate and really drive home today is that this is the setup we're seeing right now. And while these forces are playing out in real time, there's even a much bigger lever that quietly is sitting in the background, one that could inject hundreds of billions of dollars of fresh liquidity into this market overnight. This is what I was talking about in my intro. Let's talk about the US gold reevaluation. The US Treasury holds 261.5 million ounces of gold on the books. It's still valued at $42.22 per ounce, just $11 billion. And at today's market price over 3,500, that same gold, okay, is worth more than $750 billion. Revaluing it to current prices would unlock around $739 billion in fresh value without mining a single new ounce. And here is where it starts to connect with Bitcoin. Since the Bitcoin Strategic Reserve was established, leaders in Washington have been looking for ways to buy more Bitcoin without raising taxes or cutting existing programs. A gold reevaluation strategy could be one of those ways. It's a balance sheet adjustment, not a tax hike. And there's precedence for it. Countries like Germany and Italia have used gold reevaluations to unlock value and fund major national objectives, from reducing debt to stabilizing their central banks. In this case, though, the proceeds could flow into the strategic reserve of Bitcoin, giving the US a way to accumulate Bitcoin at scale no private buyer could compete with. So of course we saw this coming because the US wants to be the crypto capital of the world and insists on remaining a superpower. So I obviously saw this happening, and actually Senator Cynthia Lummis was the first to propose this a long time ago. Anyway, the idea has already been discussed in policy circles. The Federal Reserve recently published a research paper showing how other countries have handled gold reevaluations. And as I was mentioning, it's actually Senator Cynthia Lummis that has outlined the plan and how to use this approach to purchase 1 billion Bitcoin. And this plan drew interest from President Trump. Gold's momentum adds to the appeal too. It's up 43% in the past year and has broken through the $3,500 an ounce to hit record highs, creating a growing store of value that could be put to work in a strategic way. If this all plays out, even if just a small percentage of the reevaluation goes into Bitcoin purchases, which makes total sense, it would introduce the largest Bitcoin buyer in history to the markets. So if we combine this kind of demand, okay, from this gold reevaluation with the technicals and the liquidity setup I just went into in detail just a moment ago, we could very likely see the next crypto bull run cycle reach levels most people cannot even wrap their heads around, cannot even imagine how huge it's going to be. Now, let's touch on corporate and institutional Bitcoin accumulation. Because if sovereign accumulation, is at the top of the food chain, the next layer down is moving just as aggressively. Across the world right now, corporate treasuries are shifting into Bitcoin, and the scale is picking up fast. One of the clearest examples is a company called Satsuma Technologies, which recently raised $218 million, with $125 million of that settled directly in Bitcoin. It's a deliberate treasury strategy, pairing Bitcoin with its core business in decentralized AI. The goal is long-term strength, holding Bitcoin as a strategic reserve asset rather than treating it like a quick trade. And they're not alone in this thinking. Paratax's Holdings is merging with a special purpose acquisition company, better known as SPAC, SPAC, to form a $640 million NYSE listed Bitcoin treasury business. Their focus on the US and South Korea shows a calculated move towards markets with both deep capital pools and rising adoption curves. It's strategic. This means these shares and the Bitcoin behind them will soon be accessible to traditional equity investors. Innovation is also reshaping how Bitcoin is deployed. BitBridge is stepping into the spotlight with a plan to grow a corporate reserve while launching Bitcoin-backed lending products. I've been waiting for the day when getting a loan backed by Bitcoin could happen in seconds instead of through the whole slow, outdated, antiquated process banks still use. That is the kind of shift this could bring. Even established industry players are pivoting hard right now. Bakkt, B-A-K-K-T, known for its infrastructure and custody solutions, is acquiring 30% of Japanese retailer Marusho Hotta, rebranding it to Bitcoin.jp, and committing up to $1 billion towards building a corporate Bitcoin treasury. Moves like this bring Bitcoin into the operations of companies that already have trusted relationships with consumers. Moves like this bring Bitcoin directly into the operations of companies that already have trusted relationships with their customers and consumers. And the momentum does not stop here. American Bitcoin Corp, co-founded by Eric Trump, is merging with Griffin Digital Mining, I covered this in yesterday's video as well, to list on NASDAQ, aiming to control over 15% of US Bitcoin mining power, with $220 million already raised and 215 Bitcoin mined ahead of their September listing. They're positioning themselves as a major force in both production and accumulation. So if we take a look at the whole picture, it's very clear what's happening. From new public companies to established names, corporations are locking away Bitcoin as strategic capital, as they should, alongside the possible sovereign moves we just covered by nations. This wave, of buying is tightening available supply and leaving fewer and fewer Bitcoin for anyone else to buy. All of this sovereign and corporate buying is powerful on its own. But there's one more piece to this whole equation that's even more powerful. And that is the policy shift we're seeing going on in Washington that's literally opening the floodgates for crypto to fully integrate into the US financial system. This is what I was referring to in my intro on how what's going on right now could shape the next decade in crypto. Because we know since the Bitcoin Strategic Reserve was announced, the Trump administration and top regulators have been signaling stronger and stronger support for this industry. And over the last few weeks, that support has started taking clearer and clearer shape. And at the center of this eye, of the eye of the storm, sits SEC Chairman Paul Atkins and his speech on the American leadership in the digital finance revolution. Now, I've been saying this for a while, right? We had the Industrial Revolution, then the whole .com revolution, and now we're seeing the Web3 or blockchain revolution, powered by Bitcoin, of course, and top blue chip tokens. Anyway, he used similar language in his speech, and he laid out the blueprint for where the US financial system, is headed. He said every major stock, bonds, and even the dollar will be running on public blockchains. And when the head of the SEC, that used to oppose the crypto market so strongly, speaks like this, It's a signal that the largest capital markets in the world are getting ready to use blockchain as part of their foundation. So this opens the door for three massive opportunities. The first one is Bitcoin itself. With this kind of clarity, you've got banks, asset managers, and corporate treasuries finally able to bring Bitcoin into their systems without hesitation. This means Bitcoin moves even closer to being treated like a core asset across the financial world. The second is Ethereum and the other leading layer one blockchains. Adkins basically spelled it out. If all assets are going to live on public blockchains, you want to own the ones that they're going to run on, right? Obviously, Ethereum already dominates tokenized assets, stablecoins, and DeFi infrastructure. So more clarity means more projects will build on Ethereum that have more and more incentive and the other strong layer ones. And this drives direct demand for their tokens. And the third one is DeFi. For years, decentralized finance stayed out on the edge of the system. But now, with the SEC recognizing it, protocols like Uniswap, Aave, and other decentralized exchanges have a clear path to scale. This is where banks, funds, and even governments could one day plug directly into these systems. That said, one of the biggest moves we've seen recently came from Fundamental Global Inc. They filed to raise $5 billion, with the majority earmarked for Ethereum. Their plan is to stake, restake, and use liquid staking and deploy into DeFi with one clear objective: maximize ETH per share for their investors. Of course. And the timing lines up perfectly too, because the on-chain data is telling the same story their strategy is built on. Staked ETH right now is hitting new all-time highs, locking up more supply and reducing what's available on the open market. Every new validator that comes online is another piece of ETH effectively taken out of circulation for the long term. And at the same time, exchange reserves keep dropping. Right now, there's only about 18.8 million ETH left on centralized exchanges. That's not retail traders pulling their coins. It's smart money, smart old money. They're draining liquidity and moving it into their long-term custody, into cold storage, off exchanges. They don't want to risk it. It's not available for sale or trading. So if we put it all together, okay, what we have is rising demand from institutions, while supply is shrinking on exchanges, and more ETH is being locked up in staking than ever before. This setup can keep Ethereum strong through volatility and put it in position for its next major pump up. So as we wrap up today's video, we started today talking about the $739 billion sitting in American gold vaults. And we discussed the very real possibility that it could be revalued and tapped, okay, for US Bitcoin strategic reserve. And even if a fraction of it flows into Bitcoin, it would introduce the largest single buyer this market has ever seen. And if we stack on top of this, the breakout signals in Bitcoin's charts, the rising tide of global liquidity, sovereign interest, so many nations adopting it as well, and corporate treasuries locking up supply, and now Ethereum's own tightening market, you can see how all of these threads are pulling in the same direction. We're looking at a rare moment of alignment of technical, macro, and structural forces all building at the same time. These are the setups that don't come around often. And when they do, they usually define the next stage of the market, guys. Now is the moment to decide how you want to be positioned for what comes next, to decide what you want your future to look like. Anyway, guys, I love you guys very much. That's a wrap for today's video. But if you're curious about Ethereum's potential and how it could reach $16,000 this cycle, check out our deep dive in my episode here. Of course, remember to like the video and share it with a friend or family member that needs to know what's going on, right? And needs to feel encouraged, and whom you want to have an impact in transforming their finances, because now is the time. You're still in time. But okay, guys, I'll catch you guys in my video on Monday. Take care, have a wonderful weekend, and ciao.